Hello again, traders. Right, let's see if I can make this video for you. I haven't made one for ages, probably about 3 months since I've been traveling around and made my home in a heat wave on a beach for a while, mobile home as it were. So this was a really good example of how I find trades at the end of the day. So 6 p.m. H4, it is now 6:09, 18:09, whatever. I'm always keen to look at H4 changeovers because, as you know, I love trading H4s. Now, you won't have a new H4 on gold because if you follow me on Twitter, you will know that the gold H4 closes an hour later than the FX H4. So I like trading gold, as you probably know. You can see we've got divergence here as well. I disregard the wicks because we can see where the line charts should be, the open and close of the candles. And when I opened this chart up at about 10 to 6 rather, there was a wick on here. So I don't want to be really trading long, just hoping that the wick will continue to build. I want to be trading into the wick, like a wick fill, as Mr. Wicks Don't Lie mentions. So let's try and show you what I did with all of these yellow lines. Now, basically, I drew levels on the lows of line charts, starting with H4. And then what I want to do is find a gap. So I'll do that now. And what I mean is a gap is like these. That's a gap. There's no gap there. There's a gap there. There's a gap there. There's a gap there. These gaps will be about 15 to 20 pips. I know that because that final gap that I traded here based on N15 was something like 17.5 pips. So let's get rid of all these objects on here, all these lines, and just go through them all and delete. They'll delete all sorts, but the indicators will draw stuff back on there anyway. So, right, so H4, first I want to be, and this is really simple, that's it. That low has been broken. So the logic behind this is when we close below it, even if it's on the lower time frames, and this is sort of discretionary trading, but it's the second break. So you'll often get say a 5 or 15 minute break of that yellow line there. It'll bounce back and we want to get in on the second one really. So it's like a test and break. And in the old days, I always used to say, if you've got a line, you need to break it on that time frame, in other words, H4. I've since updated my thought process and said, right, any significant break, maybe an H1 or even an M15 or even an M5, if it's had a few tests of it, will be enough to say, plus all the timing, of course, the normal timing that we allow. And this is where these momentum indicators become absolutely priceless in terms of, if you can't consider longs, because, you'd have to have loads of greens on all sorts of time frames, H4, H1, M30, M15, so on and so forth, then you should be looking for short. Simple as that. So we've got our first low there. We could draw one down here as well, because and that'll be the first area of support, not the low there. So above price, I want to be drawing it on the low above the price there. So price is obviously below. We can see that on the candles, broken it. So it's tested. That's what I mean by sort of a break. We've gapped below there. We've closed higher and opened lower, and then it's absolutely gone mad. Typical liquidity hunt. And then we want to be careful with our targets. We want to be pessimistic, as it were, careful with our targets. So back to the line chart. So now I need to draw H1. Simple as that. That's all I'm doing. So we'll have a line in here. There'll be something in here, and all I'm looking for is the dips. This will be significant as well, that 3CR level. So if we zoom out, we now have a dip or a low there. So that's another line chart low. I've got thick lines on here. You can be a bit more precise if you want to be and go to a thinner line and get the actual levels from those lows. If you want to really become anal about it, you could look at the close and opens of candles, so you can bring it down to the lows of those candles. You'll notice they coincide because that's what the line chart levels are there. In fact, I have a purpose-built script, and I can't share it because it is actually proprietary, and I drag and drop it on there and it will jump to that precise line chart level there. So you'll see it. I'll stick one up here as well just to show you exactly what that does. That's how I got into these levels. There you are, the close and the open. Close and the open. And that's what that green line does. So, but I don't use that because you guys can't use it. And an imprecise thick line like this will do the job just as well. And then we go down to the next time frame. I'll zoom out a bit. And the line chart again. And what have we got going on here? So H1, I drew that there. We can see we've got that there. We can see we've got that there. Okay, so this is below price. So that's where, you know, when I was looking at this, it was price was up here. So then I want to go to M30. Notice how these line charts all tighten up. Even that divergence level drawn on H4 looks so different on H1. So take the scroll off, and we've got another line chart low there, and we can look at the candles if you want to see test, support, so resistance, support becomes support, and that's what we're looking at with the line charts. It simplifies things, and you can see a lovely gap there. You know, there's a gap between there and there. So when price broke through this low, and notice that it changes its level because the higher time frame always leads the way, which is why we can disregard that little low there if you can see it. You know, I can draw it on there. Because the higher time frame support is stronger than the lower time frame support. There you go. You can see it's attached itself to candlesticks, closes and opens, which is lower than the yellow line. But the break of the yellow line is what we're looking for because the lower time frame is less powerful than the higher time frame. And you can clearly see there's green candles there. That's what the line charts are telling us. That's a gap. That ICT bloke calls it an FVG, fair value gap, stolen from other traders' methods. But there you go. Careful what you buy, people. So you can see these gaps get filled. You know, test, 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 boom. Test, 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 boom. And that was the move I took. So just on to, I went down to M15. I disregarded M5. M15, wait for the line chart. And take the scroll off. And we can see we've got an M15 level there. But remember the higher time frame drawn on the M30 is more important. But even then, you've got a clear area of fresh air, as it were, there. So that's how I do my line charts, guys. That's it. That's how those levels are drawn. That's how I assess the price. Always watching what's going on with the momentum indicator. You can clearly see I do not want to be going long. Long sellers are getting weaker and weaker. That's what all these lower highs are telling us. And in order to find the gaps, then I use the line charts. And you know, this gap here to that next level, 25 pips. That's massive, absolutely massive. So oh, and then to enter, I just want to be looking at how price reacts to these levels. So I could see it testing, 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 testing. And finally, there's the final test that I talk about. You know, that where it just breaks through, comes back. This is classic. That is an absolute classic way. You know, it's tested that level there. This level, remember, was drawn way over that, way over there. It's coming down and tested it. It's finally broken it, but there's no, excuse me, my reason, well, I wasn't here watching price there because that is nowhere near the 4-hour close. 1840 is actually 440, and then we want to see 20 around the 20 mark there. That's the new FX 4-hour bar there starting, and as you can see, you know, I've mentioned this many times before. When I trade H4s, I will trade perfect looking setups before, after and during the H4. It's all about the setup, and it's all about getting near to that, what I call the momentum, H4 momentum time. And you know, gold often does that. Gold will often continue when the FX US dollar, for example, which runs everything, may well be thinking of a reversal, but that's all down to the dashboards. But here's the classic, this is the classic entry based on a break of a line chart low. And as you know, I wiped all those line charts off, drew them back on, and they were in pretty much exactly the same place. You saw me clear that down and draw these on there, and that was what triggered my interest. That early break of that line chart low, and then it, you know, failed to make any sort of move to the long side. And remember, all these support levels are drawn way over on the left hand side of the chart on all the different time frames, and as such, support acts as resistance when price comes back up on the right hand side of the chart. So it was a pretty safe bet that if we got the right triggers, i.e. the momentum triggers and all the different price action, 3CRs, consecutive 3CRs, there's a 3CR down, there's them flushing out the buyers, then another 3CR down, a classic move of price. This is the 5 minute, remember, and I go down to the 1 minute and study that too, and literally that 3CR down, then it will try to pull back again on the 1 minute and then take the entry based on the 1 minute and what your momentum or my momentum indicators are telling me. So that's it. How to gauge, draw line charts on multiple charts, in this instance on multiple time frames, should I say, this instance from H4 down to M15, and then how to watch them, learn from them and trade them. And remember, we're talking about trading timing, 3CRs and RSI and TMA momentum. Timing and candlestick momentum. That's it. Thanks for watching. Have a great evening. What is it? Tuesday. Back into holiday mode.